All right, here we are. Hey, everybody. Kamisha, Whitney, Tanya. How's everybody doing today?
Doing great. How are you?
Fabulous. All right, we're going to give it just a couple of minutes here. While we are waiting, I encourage everyone, drop your name, where you are from. Keep letting people in. We got people dripping in here. But yeah, drop your name in the chat. You guys, this is a very laid back conversational environment that we're going to have today. So this is in a small group, right? So this is really your opportunity to hop in here and chat us questions as we're talking about different topics. Because like chances are, if you've got a question, somebody else may have the same question, right? So there's no dumb question. And I see it a lot with attorneys. I actually had a tax preparer tell me one time, well, I assumed that they knew that because they're an attorney. Like, yeah, they're an attorney, not a tax preparer. So you guys, seriously, I get it all the time. Attorneys like, this may be a silly question, but look, there is no silly question. This really is a safe space to ask any question that's on your mind. Bring up, like we kind of promoted for this event. A lot of times people are like, hey, my friend told me that I should be doing this on my taxes. How come you didn't ask me, Mr. or Mrs. Tax Preparer? So we want to hear what your friends are saying, right? So that we can have this conversation. So again, for those of you that are just jumping in, I encourage you to share your name, your state, your website if you want. Utilize this group to build your network. In the chat, introduce yourself. And we will get going. We still got people coming in, but I'm going to honor the time. Hey, Bill. Lillian, how are you? How is everybody? Ooh, here we go. All right, so I'm going to keep letting people in, but we're going to go ahead and get started. So I'll say it one more time here before we make introductions with Gary and Austin here. If you didn't hear me, if you just got here, if you're comfortable, drop your name, your website, where you're from in the chat. Let everybody know who you are. Feel free to utilize this as a networking group. This is a very laid back, non-formal conversation around taxes, around those deductions that we always hear about, but we're not really sure if we should be taking. All right, so most of you know me, some of you don't, some of you are brand new faces. So thanks for coming. It's really good to see everybody. My name is Chelsea Williams. I'm the founder of Core Solutions Group. We do like money management for law firms. So we do the books, the accounting, we partner with Gary and Austin's firm to make sure that law firms have proactive tax strategy solutions. And we also function as fractional CFOs to law firms. Today, we are focusing on that tax topic, right? So Gary, I'm gonna let you and Austin introduce who you are and what you guys do.
Sure. My name is Gary Massey. We have a firm in Atlanta, Georgia, specializing in small business tax issues. We handle tax and accounting for our clients, and we also represent taxpayers before the IRS when they're having tax controversy matters. And very much appreciative to Chelsea for inviting us to speak today and to be part of this discussion.
My name is Austin Bell. I'm the tax manager at Massey & Company CPA. I like to consider myself Gary's right-hand man, helping him with whatever's necessary. I kind of have my hands in a little bit of everything at the firm. So if you're working with us, you'll definitely be working with me and Gary.
And one thing I really appreciate in working with you guys as much as we have already, you guys really do have that team, right? And having a team, a strong team, especially when it comes to a tax firm, is really important because, I tell people all the time, tax preparers, it really takes a special something because everybody and their mother and their aunt and their grandparents are filing taxes in a 3-month window, right? So imagine, if you will, everybody needing an attorney within a 3-month window of the year. Like, that's a lot of stuff to deal with, right? So having your guys' team be so solid and responsive and informative, I believe is really huge.
Well, one thing that we've noticed is there are a lot of folks who are unhappy with their CPA firm, and it's usually about responsiveness. So Austin and I and the rest of our team, we answer our calls, and if it goes into voicemail, we will get back to you very, very quickly. And we really believe in being responsive and in being in touch with our clients throughout the year. We are not just a tax season accounting firm. We handle tax issues with our clients throughout the whole year, and that's very important.
Yes,
You know,
I agree.
Yeah, I would even argue that that's key, right? So I tell people, if you're talking to your tax preparer one time a year, if you're having a conversation with them one time a year, chances are you're probably missing out of things just because of the lack of communication, right? And that's really what we're here to talk about today and discuss. The difference between tax preparation and tax strategy. So I always reference this quote by Judge Lern Hand. He said there are 2 tax systems in America, one for the informed and one for the uninformed. Both are legal, right? So today we want to learn about that informed, proactive tax strategy, as opposed to kind of that 1-year tunnel vision tax preparation. So Gary, Austin, what does that mean to you guys, that kind of being proactive and having an actual strategy?
Well, that's a great question, Chelsea. And I think that the most important thing is a close relationship between the tax people and the financial people. So Chelsea, we're very excited to be working with you and with your clients, because we're going to do this throughout the whole year. We're not just talking during tax season. Chelsea is going to be creating the books and monitoring the details of the financial statements throughout the year. And Chelsea and I and Austin will be talking throughout the 12 months. And that is the ideal way to keep on tax, so to keep on top of tax opportunities.
Yes, and again, as new legislation comes through, it's important for us to stay on top of that and communicate it to the clients, informing them of new strategies and how to handle things going forward.
I love it. All right, so we're going to dive in. We have a few topics that we know you guys want to hear about. While we dive in, I'm going to kind of list some of them off, and I'm curious if you all would just drop in the chat, like, which one are you most excited to hear about? So just to kind of run through the list, some of the things that we're going to be talking about today are the importance of quarterly taxes, those situations where you have these back taxes that you owe for whatever reason, and kind of how to move forward from there, how to avoid that. We talked about tax compliance versus tax strategy. Part of that strategy is making sure that you have adequate books that are kept up through the year. You're not cheaping out. You're making sure that it's not garbage in, garbage out, that you have solid data. We're going to talk about some of the legal loopholes that you should really be using in your business. We're going to talk about, so this is really relevant to especially in a post-COVID world, right? People are employing and working with employees who live in other states. So we're going to talk about, what does that mean for you in terms of taxes? We're going to talk about tax-free employee benefits and how to really maximize those fringe benefits for yourself and for your team. COVID was really, really rough in the legal world, and particularly a lot of law firms are losing their staff and finding it hard to get those replacements and to find those people for their team. So we're going to talk about the little things that you can do for your employees. So to kick it off, let's have a conversation about a super relevant topic, which is quarterly taxes.
Well, one of the surprises that I always have throughout my professional life are the number of business owners who don't know that they have to pay taxes quarterly. So this applies to just about every law firm who we deal with. And maybe Austin, you could just mention what those quarterly dates are. Do you have that?
It is April 15th, July 15th, and October 15th, and then January 15th, I believe.
June 15th, September 15th. Sorry.
January 15th, January 15th, I know is for sure.
Right, so what's coming up very quickly are the fourth quarter tax payments. So those are due January, actually this year is January 17th because the 15th is over the weekend.
Right.
So everybody on this call who owns a business, and it's probably just about everybody, is going to need to pay quarterly taxes. And the fourth quarter for 2021 is due on that Monday, which is January the 17th. And Austin and I are working on fourth quarter payments for our clients right now.
Yes. And one good point to make for quarterly payments, especially for S corporations. So if you have yourself on payroll through an S corporation for your reasonable compensation, it's a good idea to take some extra withholdings to avoid having to make these quarterly payments. So if you withhold a little more from each paycheck, it can take the place of that and be a lot more streamlined, a lot less stressful. You don't have to think about it. It just is taken care of.
Absolutely. That's a great idea, Austin. And that's something that we talk about with our clients regularly because they often don't want the burden of having to think of quarterly tax payments and having to save up for those taxes. So do it on a regular basis via payroll. One other thing that I'd like to mention about quarterly taxes is whenever somebody has a tax issue, we call it a tax problem or tax controversy. They end up owing taxes which they can't afford to pay. In order to negotiate with the IRS, they have to be tax compliant, which means two things. The returns have to be filed, particularly for the past 6 years. And then secondly, they have to be current on their quarterly taxes. So I cannot negotiate an offer in compromise or an installment agreement for a client if they're not current on their quarterly taxes. So that's really critical in our business.
Oh, Austin, your cat's joining us today.
Yeah, sorry about that. I tried to kick them out, but they worked their way back in.
No, you guys, I think this is a really good topic. And, you know, like you said, quarterly taxes can be scary. And I see a lot of people that I work with on here and some that I don't. Another method for kind of saving for that tax burden, if you don't like the withholding it from your paycheck, if you want an additional method, an alternative method, we work with almost all of our clients to set up a system similar to Profit First. So anybody who is on here who is familiar with the Profit First system, it's like a modern day envelope system. And I may be dating myself here, but for those of us who know what it was like for mom and dad to come home and have their paycheck cash on the kitchen table and then set that cash aside into different envelopes. That's what we have a lot of our clients do, is set up this multi-bank account system and make sure that they are, yes, Tanya, go Dave Ramsey, that's right. We have a Dave Ramsey fan in the house, you know, to set aside for taxes. And it's kind of the same idea, right? So you're either taking additional taxes out of your paycheck so that you don't have to worry about it, or you are physically setting that money aside from revenue into a tax account. So yeah, super important tax. And again, you guys, for those of you, I know we still have people trickling in. For those of you who just got into the room, this is a very discussion style meeting. So if anybody wants to raise their hand, if anybody wants to leave a question in the chat room, we highly encourage that. All right, anything else on estimated taxes before we move forward, guys?
I don't think so.
Maybe one thing that's related to this topic, which is worth mentioning, regarding entity choice. So there's the and payroll. So the S corporation is probably one of our greatest tax savings opportunities, but with it comes an obligation to have payroll, and that's related to this whole question about quarterly taxes and payroll taxes and how you pay into the tax system. So maybe this is a good time to talk about entity choice.
Yeah, this is a perfect time. And I do have a question in the chat. So this is from one of the people that we both work with here, is how is that transition going to happen? Over to you guys, which is a really good question. Thank you for asking. The Massey team is working on quarterly taxes as we speak. So now that December is closed out, we are able to get full view of the year, and estimated tax suggestions will be out to everybody soon.
Yes. Yeah, that's something I've been working on the past couple of days, and we'll continue to try and finish up over early next week and have them out to everybody.
Awesome. Thanks for asking that. And yeah, the entity conversation, that's so, it's such good timing. I had a meeting with Joey Vitale. We did a Facebook Live. So if you guys know of Joey, I think most of the people here are in the legal space. If you've ever heard of Joey Vitale, or if you hadn't, go check out our Facebook page. We had a really good conversation on entities and the options that you have over there too. But yeah, and you know, the sum of our conversation yesterday, and if you know me, you know that I am not a fan of like the cookie cutter solutions, right? And you know, when it comes to the entity that you choose, there are a lot of different factors to consider in that choice. And again, when you're working with a professional like me, like Gary, like Austin, if they're not asking you questions to get a feel for what your priorities are, to get a feel for your family situation, because your business is personal, not only financially, but you know, these are our babies, right? Our businesses are our babies. So if you're working with a professional and they're not asking you, you know, questions like, do you have kids between the age of 10 to 12? What's your entity type? Are you buying a house next year? You know, you may want to, again, be glad you're here because we're going to tell you why that's important. But also consider communicating with them on a deeper level. But I'll let you guys talk about, you know, what are some of the considerations for entity types?
Well, so probably the most common entity type that we see is the limited liability company, or LLC. And I don't have to tell this group about protecting assets and avoiding liability. I'm assuming that the people on this call know about that. The LLC is a fantastic way to limit your liability, and I'm sure the attorneys know about that. However, it doesn't save on taxes. So if you want to save on taxes, the best way to do that is through an S corporation, in my experience. The C corporation, which is the kind of old-fashioned larger corporation, that is generally not advisable. It's more complex, has higher compliance requirements, and brings with it double taxation, which is a big bite. But the S corporation is a great idea for most of our clients. Most of our clients have S corporations, and the easy way to do that for a new entity is you start off as an LLC, and then you can make an S election later, and that allows the LLC to be taxed for tax purposes to be an S corporation, but still legally it's an LLC. And with that, it brings a tremendous opportunity to save on taxes. And these tax savings has to do with Social Security taxes. And as we mentioned briefly before, the S corporation has to pay reasonable compensation to its owners. And beyond that, it takes distributions. And it's that piece of the distribution, which is not subject to Social Security taxes, that is the tax savings opportunity. And that's probably our number one opportunity for saving large amounts of taxes. And we regularly save our clients about $10,000 per year by instituting that tax planning strategy of having the S corporation.
We just had two of the same exact question in the chat. And I don't know about you guys, I get this question all the time. Like, and you know, when do I switch? When does it make sense to switch from a non-corporate entity to a corporate entity? And I mean, I agree with you, Gary, you know, start out as an LLC and then plan to make that election. And I'll just say that while also saying, I said this yesterday with Joey, there's this kind of struggle between tax professionals and lawyers, business lawyers, between who should be advising on what your entity type should be, right? And my solution is talk to both. Talk to both your business attorney and your tax preparer and make sure that this switch makes sense for you. Because we're going to talk about some of the benefits having an LLC. If you have a family situation where maybe you have kids that are 10, 12 years old or older. And I know with the legal world too, a lot of times like what I run into are partnerships. So again, working with somebody who's going to ask you what your priorities are, right? Because in these partnership situations with some of the clients that we have, they know they could save taxes under an S corp structure, but more so they value the flexibility in only paying taxes on their share of profits. And a partnership allows for more flexibility in owner and partner ownership year over year, as opposed to a more stagnant structure, a fixed structure like an S Corp. And, you know, Gary and Austin, I don't know about you guys, but we do this exercise with law firms where we go and do like a 12-month forecast for the entire year. And when a company is an LLC and they know and are aware of, okay, I should be switching to an S Corp, it's so fun because what I can actually do is I can plug in, instead of an owner's draw, I can flip that number up to the wage because, you know, like Gary said, if you're an S Corp structure, you know, technically you're also an employee of the law firm. Therefore, you have to be paid on payroll with wages taken out. But now that is tax deductible, whereas an owner's draw under a sole proprietorship LLC is not. And it's so fun because I can almost flip that switch in the exercise and be like, here's approximately how much less, you know, profit you're going to have to pay tax on. And in my experience, that number, generally speaking, is somewhere around $60,000 net taxable profit. That's when it starts to make sense, only looking at the business. So you guys, this is totally generic, you know, advice for those of you who are not our clients. Definitely, you know, give us a call, give Gary and Austin a call, or, you know, speak to your tax preparer. But at that $60,000 net taxable profit is when we start to say, okay, we may want to have these, start having these conversations about, are we going to save enough to where it's worth switching to an S Corp? What do you guys have to say on that topic?
I completely agree. I was actually just about to chime in and say usually around the 50,000 mark, but it depends. So
Hey, potato,
it more or less
potato, right?
conforms. Yeah.
Not cookie cutter.
So one of the reasons that we say that is the S corporation does bring with it some extra compliance burden.
Right.
You have to have decent bookkeeping in order to have an S corporation because you prepare a separate tax return, which comes with a cost, and you have to be able to show a normal business-like balance sheet and income statement. And that's where Chelsea becomes so important. And that's how we work together. But it's a much more professional and business-like requirement, and it brings with it a certain cost, and you have to have payroll. So there's an extra cost for having payroll. But if we can save you $10,000 a year, approximately, it's going to be worth it. You're going to end up saving quite a bit of money in that way.
Yeah, I love it. And you're so right. You know, I tell people, look, if you're paying $250 for bookkeeping a month, chances are you're not getting what you should be. Like, so, you know, bookkeeping is not something that you want to cheap out on, or try to do it yourself if you're not incredibly familiar with how to, you know, we take a course on how to keep the books. And most law firm owners that I work with, they don't take that course. And as much as they try, and I really give them kudos for trying, the truth is, like, the hard, blunt truth is, if you're doing your books yourself, chances are they're not being done right. So, you know, I love that you guys bring that up. Bookkeeping is so important. And, you know, it's true garbage in, garbage out. You don't want to be making business owner decisions based off of garbage.
You know, Chelsea, there's some just really important basic fundamentals about running a business that where bookkeeping and accounting becomes important, aside from just making financial decisions. For example, figuring out which client owes you money. You know, who's paid what for their retainer. Just to keep track of that, once you have a large book of business, you have to be organized. And if you can't do that yourself using QuickBooks, and QuickBooks is not easy. You know, we use QuickBooks every single day, and we find it challenging. But if you want to keep on top of who owes what to whom, which client owes you money, and when they call you about an additional project, you have to figure out what's on retainer. You really need the support of a good either internal or external bookkeeping staff for that.
Yes.
Yeah.
That's not about taxes. That's just some practical business advice.
For sure. So we have a good follow-up question with the entity conversation, and we were kind of talking to this. So Devin, thanks for bringing that up. They asked, what about additional entities for purposes of owner benefits, like a management company? You know, so let's get into that. Like, once you hit the even next phase, what are some multi-entity strategies that you guys know about, suggest?
I love that question. What I do personally, my company is an LLC. It's taxed as an S corporation. So that's what I recommend for most of my clients, and I do it myself. And we have a separate entity set up which is not an S corporation, and it can provide certain benefits to the owner employees, which is me. And you could do it for yourself too. And there are a variety of benefits that you can offer to yourself. The one that I like in particular is the HRA, which is a healthcare reimbursement account. So I have my wife as an employee of my support company, which is not an S corp, and she can get reimbursed for healthcare, for non-reimbursed healthcare expenses, like things that are not covered by insurance, and even insurance premiums that would otherwise be limited as far as deductions. It becomes 100% deductible, and it's an amazing opportunity. It involves a little bit of administrative cost to set up a separate company and keep the books for that other company. But the amount of money that you can save on taxes is just incredible.
Yeah, and another benefit of having that management corporation or that management LLC that's not a C or S corp. So say you own an S corp and you want to hire your kids to help around the office with whatever it is. Through an S corporation, you would have to withhold those employment taxes, so the FICA taxes, Medicare, everything. But through a LLC, you do not. So the S corporation can pay the management company, and then the management company can hire the kids and not have to withhold those taxes for additional savings. If you already have just a regular LLC, you can hire them directly. But for a C or S corporation, having that management company helps out a lot.
By the way, for people who are older than Austin, you can do it for grandchildren too.
Right. Yeah, I'm not thinking about
Austin
grandchildren
is
yet.
thinking about children, but I have grandchildren, so I'm telling you, can do it for your grandchildren also.
I love that. Awesome. And just to add on to that, that's that kind of non-cookie cutter approach that I really appreciate working with you guys for, right? So if you're, for example, a solo LLC right now, you have kids that are of age to be able to be employed by the LLC and not have to pay those employer taxes. That's another way to kind of prolong that $60,000 general profit, taxable profit level, right? So instead of converting straight to an S corp, maybe you bring that money to your household through bringing your children or grandchildren on, to help out. And I just want to mention before we move on, and we're getting some questions, you guys, these questions are really good. Keep them coming. That question about the multi-entity specifically had a question about SEPs. Can you guys speak to SEP benefits with the multi-entity structure and how that looks?
I'm not aware why that's an issue in particular about a SEP. You could you can have a SEP, and by the way, one of the great opportunities there is that you can pay in later after the end of the year and still get a tax deduction. So that's one of the few tax planning benefits that's still left after the end of the year. And that's not just SEPs. There are a few other kinds of benefits like IRAs, for example, on the retirement plan side. Austin, do you have any ideas as to why that would be good for a SEP in particular?
No, I think a SEP IRA works pretty seamlessly with an S corporation. And I mean, pretty much any corporation. So even sole proprietors, I don't see much of a reason to have a management company for that. I know for an S corporation, it is the amount you can contribute to a SEP is a function of your W-2 salary. I think it's 20 or 25% it works out to. So if you're excuse me, not paying yourself enough, then you really can't take as much advantage of the SEP IRA. Maybe something along those lines could be a workaround for that with the management company. I'm not exactly sure.
That's a great point, Austin. We see people come into our office and they haven't paid payroll, and then they want to do a SEP contribution and they just can't. So
Right.
It's a fantastic practical piece of advice, Austin.
Yeah.
Yeah, and that's why these conversations are so important, right? And just, having a professional that's willing to dig further into that for your specific question. And, Tanya here said she was able to do a C Corp and she did a side-by-side comparison. And, she could really see those savings. So again, if you're working with us or anyone else, and you just want to feel out what is the best situation for you, have that entire conversation, right? And look for the side-by-side comparison. And so she also has another really good question. So her struggle as being a corporation is determining what the target amount should be for her owner's payroll versus taking distributions. And I would love to talk to you guys about this because I feel like it's one of those areas that the IRS is like, you can take payroll, but you can only take a certain, fraction of that in distribution. That's only a certain amount, but we're not going to tell you what that amount is. But there's this gray area. What is your guys' take on that?
That's called reasonable compensation. So if you're an attorney and you're taking payroll of, say, $10,000 a year, that's not enough. Okay, but what is reasonable compensation? It's a bit of an art to figure that out. We sometimes do studies for our clients when we figure out what the comparable wage should be for someone in your geography doing this type of work, and we come up with a number. As a practical matter, the number that I usually see is about 1/3 to 50% of the net income. If the business is making a loss, you don't have to take payroll on a losing business, because a person wouldn't do that. That's not normal. But if your business is making money, so figure on, just without doing a study, say somewhere between 30 to 50 or 60% going into payroll. However, if you pay yourself too much, then you could go over. There are certain Medicare thresholds. There's the 3.5 or 3.8% or 3.5% extra tax for people who are making above a certain amount of money, and so it'll be triggering. It's going to trigger the extra tax. So you want to find a sweet spot that will satisfy the IRS, that will look reasonable, but won't trigger additional taxes that you have to pay. Austin, do you have any thoughts?
I like to think of it as kind of a replacement cost. So how much would it cost for you to go out and find somebody to do your job? If you wanted to be hands-off, run away from the business, and just have someone manage it, how much would you have to pay that person? That would be the most unarguable, solid, reasonable compensation. But again, it is about finding a balance too.
And that's such a funny question, right? Because I'm sure we have a lot of solos in here who are like, well, I'm the breadwinner and I'm the marketer and I'm the office manager. So, that's kind of where that gray area comes in. So
Right.
Again, you guys really having these conversations.
That's true. But if you take your whole job and you divide it into different sectors of what you do, like even if you're the office manager, so an office manager does not make the same money as a attorney. So what you pay an office manager is less than what you pay the attorney. And if the attorney's also taking out the trash, that's also less. So if you really want to do a good job of calculating the number, we can analyze this for you, and we can come up with a number that you can put into a file if the IRS ever audits you.
Yes, documentation. That's a big part of it, right? Like when you get audited, if you have documentation for what you're doing, that builds your kind of rapport with your auditor, right? Because auditors are people, right? If they can see you're trying and you're collecting all of these things and doing your due diligence.
Right. Chelsea, one thing related to that would be keeping receipts. That's another kind of paper that you could put into a file. And we like to call that audit proofing the books. If the IRS comes and looks at your books, they ask for your QuickBooks file, and you can pull out whether it's an electronic file or a paper file, and you can show receipts, that's called audit proofing. You're probably going to be fine.
Yeah.
It's a little bit stricter when it comes to meals. Is you're supposed to write down in your receipts who you're having meals with and what the business conversation is.
Right. And most accounting systems have a way to attach a digital version of the receipt right to the transaction. 99% of people don't do that, but it's a tool that could be used. That's super helpful. Everything's in one spot. You don't have to dig through files or anything.
Do you do that, Chelsea, for any of your clients?
We do. We have a few clients who insist on having receipts attached to every single transaction, which is fantastic. But again, that is more time. So expect to pay your bookkeeper or accountant more to do that. What I typically tell people is, get yourself a Dropbox or a sync. or a Microsoft Share, and take a picture on your phone when you're out to lunch and throw it in the cloud, file it by year, by month, so that at least you have a general area where you can go and search those receipts. And I want to speak to what you said real quick here, Gary, too, because some people don't know meals are typically 50% tax deductible. That's what Gary meant by they're a little bit different. Now, there are situations where meals are 100% deductible. And those are situations where it is a working lunch with your team, right, guys? Mary Massey?
Yes,
Yeah?
yes, sorry.
Holiday party?
Yes.
Yes.
Holiday
Yeah, so
party?
that's-
Yeah, there are a few exceptions, yes.
Yeah.
But if you're taking a client out for lunch, that's 50% deductible.
For 2021, if I'm not mistaken, so if it's at a restaurant and you're meeting with a client, it's 100% deductible.
Ooh,
I believe for 2021.
It's true. There were some very recent changes relating to COVID, encouraging people to go out to eat.
Yeah, I don't think it'll be a permanent thing, but for temporarily, there's been some more leniency with meals.
and on that topic, I'm curious myself, because I've kind of been like mumbling for the past few months. I'm like, you know what? They're going to become more lenient now that COVID is a thing. And like, for example, if we were all a law office right here and this was all the team and we're sending everybody DoorDash credit, this is a working lunch, right? Like I can foresee, the IRS making these flexibilities for even a post-COVID world, right? Because a lot of this remote stuff is sticking. What's your guys' opinion on that?
I see a lot of the workforce moving to remote work. It's just one of those things that it was triggered by COVID, and then I guess people decided that they like it, and it's starting to stick really. It is causing a lot of confusion because different states handle it differently. Each state handles it differently. So if your company's based in one state and you're working remotely from another, it really depends on how that's handled, but it's a tax matter that needs to be addressed.
Yeah, and you bring in a good intro to kind of talk about state-specific things. So just like you all know, your state's IOLTA rules are tailored to your state, and you need to look that up. It's also important to understand that your state has a lot of rules and guidelines that could be different from somebody else's state, right? So again, we are having an open, honest conversation with everybody, but at the end of the day, these are general suggestions. You'll want to check with us if you work with us already, or check with your professional, or reach out to us. Jessica in here already mentioned, David was like, we were talking about the kids and putting them on payroll, and David's like, oh, mine are way too young, that'll never fly. And Jessica said she looked up the law in Missouri and there's no limits to so you really have to consider the state that you live in, right? And what's going on with that. So we've got some really good questions. I'll tell you what, I'm going to go with these questions because, again, you guys are leading the conversation here today. And we've got a list of topics that we'll make sure to mention before we end it here. We've got about 20 more minutes. We want to be respectful of everybody's time. Jessica asked a really good question. Is the beginning of the year the best time to switch to an S Corp? And what I want to say on this is just understand what switching to an S Corp means. You can switch to an S Corp whenever you want, but when it comes to like my suggestion of when to make that switch, a cutoff year is going to be the easiest by far, right? Just because you don't have to file a split tax return where you're a sole proprietor or partnership for the first half of the year and then separate the books and the tax returns and all of the records. Ideally, that January 1st date is the best. What about your guys' take on that?
Oh, that is so true. Austin and I have a client that was involved in a transaction where they purchased a business or sold a business, and it was like something like December, I don't know, like December 22nd, something, and so we had to do a cutoff and file two returns. One was for the whole year up till December 22nd, and the other was for just a couple days. And that's just a waste of money. You have to have separate books. You have to have a separate tax return. Just wait until January 1st.
Yeah, and also speaking on when to make the election for an S Corp, you can make even a late election later on in the year. It's fairly still simple, but
Technically,
making that decision
75
is,
days.
I'm
Right?
sorry?
Technically, it should be done within 75 days
Right, but
of the year.
there are ways to
You
do
do
it
it
late.
late.
You're right. So, but making that decision early in the year gives you time to set up good accounting, to set up payroll and really make a plan for the rest of the year. So if you decide in December you want to be an S corp for that year, you really have no time to put together everything that needs to go into having an S corp. So doing it early in the year is definitely suggested.
Yeah, and for those of you that are thinking like, guys, it's January 7th, you're telling me I gotta wait till next year? No. There is that option to make the late filing, and then like you guys said, there's a 75-day window where you can file a Form 2553 or create the entity, whatever technical tax accounting thing you need to do. And then, you know, like Austin said, in some cases, there is a special election that can be made to where if you are outside that 75-day window, you still have a chance of being treated like an S corp. But again, understand what that means, because, you know, like we've touched on a couple of times, if you are an S corp entity, you are now technically an employee of the law firm. Therefore, you do need to have a payroll software and set yourself up as an employee with taxes withheld. All right, so our next question is, what are the average costs for bookkeeping and accounting per month? And what should we expect to receive per month from your bookkeeper or accountant? Oh my gosh, Whitney, thank you so much for asking that question. So the first thing I want to say is that cost varies based on how many transactions, how big you are, right? Some of you in here have 500 transactions running through your law firm every month that somebody has to go in and treat individually, right? Some of you may have only 20. So the cost is really going to depend. I heard a legal expert say one time that you should expect 2% of revenue. Now, in my experience, it's not even quite that much, but you know, under promise, over deliver. Now, to address your guys' second question, and Gary and Austin, I would love to have your guys' input on this too. You know, I talk a lot about know who your key financial players are, because it's not just one person. Your bookkeeper is not your CFO, right? Know who they are, know what to expect from them, and also understand what you need to be accountable for, right? So those 5 financial players are your bookkeeper. Your bookkeeper codes the data. When a transaction happens, they class it based on a revenue or expense category, typically. Okay, so that is your bookkeeper. Your accountant does the high-level accounting functions because they have an understanding and knowledge of bookkeeping, but they also have a bit of an understanding of taxes and how books need to be prepared in order to pass it off to your tax professional, which is your third key financial player. Your tax professional is the one who helps you with quarterly estimated tax payments, preparing the end of your tax return, possibly 1099s, right? So then you have, above and beyond that, your retirement planner, which is not those people, right? This is a different individual. And all the time I hear, oh, I shouldn't be, you know, I'm not ready to plan for retirement. I'm not making enough, or I'm not saving enough. It is never too soon to go in and have a conversation with a retirement planner so that you know and understand where your metrics need to be in order to start investing, in order to start saving for retirement, and what that really looks like. And then the last financial player that I'm not going to talk on a lot, if you want to hear about it, because it is really important, but that's not what we're here for today, is your banker. That relationship matters so much. And that was never more proven and true than when COVID hit and we all wanted that PPP loan, right? So if you're interested to hear more about the key financial players, go over to our Facebook page. That conversation with Joey Vitale just happened yesterday. But what about you guys? What's your guys' input on these financial players and knowing the difference? Because I do feel like sometimes just because we don't know, we think that the bookkeeper is also supposed to advise us on how to CFO.
I agree, and I see it a lot. So clients will ask me investment advice, you know, which IRAs they should open up, and I usually refer them to a retirement planner. Say, I can give you some high-level ideas, but really that decision should be made between you and the retirement planner but everybody should be in the loop. So the bookkeeper, the accountant, the tax preparer, the retirement planner, and the bank should all be, maybe less the bank, but should all be in the same loop and know what each other's doing so that everything can be streamlined and handled appropriately. But it takes the village. Everybody has to work together. The ultimate decisions do fall on the individual or business owner, but they should take advice from these key players.
And Austin, one thing that I would add to that, and this really relates to Whitney's question about what to expect from the attorney and from the accountant and bookkeeper on a monthly basis. I think one of the important things is what we call key performance indicators. And those are certain numbers that are meaningful that people should look at regularly to see how to check on the health of your business. And I'll just give you an example from my own personal life. So in my accounting firm, we have different departments. For example, we have a tax department and we have a tax representation department, which deals with IRS and state tax controversy and representing clients and so on, people who are behind on taxes. So what I do, I have key performance indicators that I look at regularly, and it tells me how each department is doing relative to the whole. And that's so beneficial to me in understanding the health of my business and what's doing well, what needs extra work, what needs a little bit of TLC. And I'm sure, Chelsea, that in the accounting work you do for our clients, that you can help them with those KPIs, key performance indicators.
Yeah. For those of you that are interested, I will actually drop my email in the chat. I created a law firm KPI visual that, I've identified over the 4+ years that I've been in this space are the common KPIs that every law firm should be tracking. So if you're interested, I'll drop my email, shoot me an email, and I will send that to you.
If I had a law firm, it would be good to know what am I making on various departments, whether it's trusts or litigation, whatever your particular areas are. And that's so helpful in knowing where to put your energies.
Absolutely. And that's a good thing to bring up, because that inevitably, in the case of most everybody here doesn't have an in-house CFO. You are your law firm's CFO. And as the CFO, it is your responsibility to identify, track, analyze, and make decisions based off of your law firm's KPIs. And all of these players can help support you and give you the data to do so. All right, I want to address some more of these questions here. Jessica asked, and I believe this was in terms of 50% versus 100% meal deduction. So Jessica, correct me if I'm wrong. She asked, what should it be coded as? And simply speaking, if you have a meals 50% line item and a meals 100% line item, that's enough to let the tax preparer know this amount goes into this box and the other goes into the other box. All right, and then we have another question. How do you handle clients in a particular state? So if you're asking that specifically for tax returns, payroll taxes, let me know if I'm not getting specific enough here with this question. But when it comes to having clients in different states, we do our research, right? We figure out what are the state nuances, especially for like payroll on my end. Which taxes need to be withheld where, and that's where having your accountant speak to your tax preparer is so important too, because in some cases when you have remote workers, you may have to file a tax return in that state. Guys, you want to speak to that?
Well, that's absolutely true, and every state is different. So we have to research the rules in a particular state. One thing relating to what Chelsea just mentioned is about sales tax. Now, sales tax is typically not an issue that bothers attorneys, because usually services are not subject to sales tax throughout most states. However, you may have a client that has a sales tax issue, and that is a big risk, a big audit risk area. Like, for example, I have some clients that deal with e-commerce. In e-commerce, your big issue is going to be sales taxes. And if you're selling into multiple states, and even if you're selling abroad, you're going to have issues. So just be aware that sales tax is a potential risk area for your clients.
Yep, and I can speak to attorneys specifically. Some of you guys, like in the state of Washington and Virginia, are going to be subject to possibly a property tax or an excise tax. And so we see that with law firms, making sure that it's basically like the sales tax equivalent to services in your state. Some states impose it, some states do not. Awesome. So we got about 10 more minutes here. And what I want to do, as long as anybody doesn't have any more questions, is I want to talk about some of those kind of tax loopholes that people don't know about, aren't using, and kind of get into that. And so I'll kick it off with my personal favorite, which is the fact that you as an individual can rent your personal home out for 14 days every calendar year, no more than 14 days, and be compensated to rent your personal home out and not pay taxes on it. What this means for you guys specifically, because you have this business entity in your life, your law firm can rent your personal home from you for 14 days, no more, per year for a company event. So if you're having a vendor event, you're providing food, if you have a team retreat at your home, you can take this deduction and your business gets to write it off 100% and you don't have to pay tax on it. And so what I tell people with this little loophole is call 3 high-end conference centers near you and get their daily rate for a conference room. Take the average of those 3 rates, and that is the daily amount that you can reimburse yourself through your law firm to yourself personally and not claim taxes on that. Now, like Gary and Austin, we were talking about earlier, documentation is key. So what I tell people is have a general rental agreement between yourself personally and your law firm, state the 14 days per year. Why are you guys meeting? What is going on? All of the details you can provide so that, again, if you get audited, you have that.
Yeah, and that's super important. So meeting notes, pictures, if say you have your team members there, take pictures of you doing work together, have dates for everything. Documentation, of course, is with everything is paramount importance.
And Austin, what's the number one question we get about tax deductions? People looking for extra tax deductions? It's the auto. Everybody wants to know about their car. The car, believe whatever you do, people want to know if it's deductible or not. So what I do personally, and what I recommend to our clients is to have an app. I use an app called MileIQ. It's on my phone, and every time I drive, it will calculate what the mileage is and what the tax deduction is. And you just swipe. I forget if it's not to the left or the right as to whether it's personal or business, and then you just give the report to your tax accountant at the end of the year. And that's the best way to maximize a deduction on your car.
Yes, and audit proof it.
That's right. The audit proofing. That's right.
Yeah, and for those of you like me that don't do a good job keeping up with MileIQ, I make sure that every time I leave this house and it's business related, it's on my calendar, so that at the end of the month I can go look and calculate the mileage and document it.
The other question we get all the time is about the home office. People believe that there's some kind of an audit risk associated with a home office, and they feel like they're doing something, I don't know, unethical, or they're uncomfortable with it. But I will tell you, it is in the code, in the Internal Revenue Code, you're entitled to a home office. And as long as you meet the rules, which are not that hard to do, you can get one, and it can be a significant tax deduction. And most people, most business owners are entitled to a home office deduction. Even if you're just doing administrative work at home for your business, you can get one. It's within the law. And as long as you meet a few easy requirements, you can take advantage of that.
Yes, and even if you do have a physical office location somewhere else, you can still claim the home office.
Yeah, that's a good one. That's one that I get a lot of questions about too. And, also the home office benefits can be extended to your team. So a few years ago, employees could deduct certain job expenses. Right. Well, a few years ago, that ability was taken away from employees. So one thing that you can do as the employer, so we'll kind of talk about fringe benefits and tax-free employee benefits, guys, is, you know, you're an S Corp, you get a home office benefit, right? So can your employees. If you have employees that are working from home 2-3 days a week, 100% of the time, you can reimburse them for their home office use, right? Some cell phone, home internet. What are some of the other like employee benefits, Gary and Austin, you guys see?
Well, cell phone is an issue.
Yeah.
If you have a cell phone that you use for business, you're entitled to 100% deduction, provided that you have at least these used to be the rules. I'm not sure if it's changed recently, but as long as you have a landline, then there's an assumption that your cell phone is fully for your business. I don't know if that landline rule has changed recently because even I don't know.
Who has a landline?
But that's what the
We know
rule
how
is.
long it takes the IRS to update things.
Right. I mean, that's who has a landline. Austin, I bet you don't have a landline.
I haven't had a landline in a few decades.
You know what? My grandma actually still has a landline with a cord, and right next to it, believe this or not, she has one of those old phones with the microphone and it's like the wooden with the spinny dial thing, actually. Oh my gosh, hilarious. Yeah, so that's a good one. That's a good one. Any
Yeah.
other
Sorry, I believe even employee mileage can be reimbursed too. I know it used to be. I don't think anything's changed with that.
And Austin and I deal with, there are certain kinds of reimbursement plans, which even the owner can take advantage of. So if anybody gives us a call, we could go into the details, but there are things that you can do to get reimbursed for all kinds of things that you're otherwise not taking advantage of. Utilities, for example, and Austin and I have dealt with this a lot. We have a lot of experience doing that, but it's a way to convert personal expenses into business expenses legitimately. Everything we do is going to be legitimate. You know, we don't take risks on behalf of our clients that we don't feel, if we don't feel we could stand up in front of an IRS officer and explain it, we are not going to do it. But you are entitled to take all the benefits under the law, and we will represent you to that extent.
Yeah, it's that informed tax in the United States, right? There's two types. We want to be the informed tax professionals. All right, we have I have one more question on here that I want to address because I know it's 2 o'clock. I know everybody has things to do. So we have a situation where they are a solo and they have their spouse on the books, but giving the spouse the health insurance and claiming, I think this is referring to the owner and this, yeah, we still got here. So your spouse is on the books and the spouse has health insurance and is claiming the owner as the dependent. So do we need some clarification on that? Do you guys?
Oh, do it.
Yeah.
It's a great idea. Personally, because I have an S corporation, I have to do it a little differently because you can't do that in an S corporation because the owner is restricted in his deductions for various benefits. So what I do, as I mentioned, I have another company, which is an LLC, and my wife is an employee of the LLC, and she gets benefits under an HRA, and then she can be reimbursed for the healthcare of everybody in the family that's under the insurance. So you can definitely do it.
Okay, and so what this is saying, and I had to like think about it and process it, and thank you, Gary, that helps me make more sense of it. So I think what this is that LLC strategy where we employ family members, where in a husband and wife situation, paying the spouse through W-2, that money still comes to the household, right? The only difference between whose name it is if it's tax deductible or not, right? And I know one thing to consider with this is the fact that you're not contributing to Social Security. If you are the owner, the sole proprietor, and you are paying a W-2 to your spouse, right? You're not claiming Social Security for you. Therefore, if you plan to retire and get those benefits, you know, some of us are like, oh, they won't be around, right? But again, what are your ultimate plans? Because either that's relevant to you or it's not, but know your options. All right, and then we had another question. Has COVID relaxed the stringency for home office deduction criteria? My theory is that if it hasn't already, it's probably going to, but what do you guys say?
I agree with you. I haven't heard anything, but I think that logically that is correct.
Yeah, it takes them usually a year or two to catch up with the times.
They're like the courts. This is why I can relate to attorneys somewhat, right? Like we both deal with agencies and entities that are just kind of slow moving, right?
Has anybody had the experience of calling the IRS recently? I mean, forget about it. We CPAs have a few little secret tools that we could use to get into the IRS quicker. But if you don't have those tools, I mean, it's like almost impossible to get to get someone on the phone at the IRS.
Yes. God, and who wants to sit on the phone for 3 hours and instead of going to bill $250 to $350 an hour? It's like highest and best use of time, right? Yeah, and that's a good intro to this next question. So Jessica asked a good question. Who are we? And are we the same or are we different? So for those of you that weren't here for the very beginning, and this may be kind of us wrapping up. So if you have any last minute questions, please make sure you get them posted now. So to kind of recap, my name is Chelsea Williams. I'm the founder of Core Solutions Group. Core Solutions Group serves as some of those key financial players, but not all. Therefore, we partner with folks like Gary and Austin to help you fill that role and have a communicative financial team working on your behalf. So their specialty is tax and helping you if you owe a lump sum of tax. Core Solutions Group, we do the accounting, cash management, and fractional CFO roles. So we are two separate companies, but we work incredibly close together because we both understand the importance of all of these roles and know that we have to stay in our areas of strength and partner with people like each other to work on clients' behalf.